Hey, what's up everyone? This is Silver Slayer. This is by far the most important video I'll ever make on this channel. We're talking about the biggest short squeeze in the world, pushing silver from $25 all the way to $1,000. I mean, this is all coming from Wall Street Bets, the same people behind the Robinhood GameStop situation. Look what they have to say in this official Reddit post. Silver bullion market is one of the most manipulated on earth. Any short squeeze in silver paper shorts would be epic. We know billion banks are manipulating gold and silver to cover real inflation. And if you remember last night, I posted a video at 10:30 p.m. before all this actually started, talking about JP Morgan, Merrill Lynch, these shady banks that are spoofing, placing false buy orders on exchanges, manipulating the price. Both industrial case and monetary case, debt printing has never been more favorable for the number one inflation hedge, which is silver. Inflation adjusted silver should be at $1,000 instead of $25. Why not squeeze SLV to real physical price? Think about the gains. If you don't care about the gains, think about the banks like JP Morgan. You'd be destroying along the way. This stuff is crazy. This isn't only detrimental on so many levels to so many companies, but also astronomical for the price of silver. Now, I'm going to read a couple articles that are covering this stuff. I want to hear their perspectives. But what do you guys think about this? This stuff is crazy. They've moved from these stocks like GameStop and moved to precious metals, and not only gold, but silver itself, which is usually the rebellious metal, right? The metal of the rebels, the one that goes against the grain the most. So as silver is a precious metal, a targeted short squeeze would affect the value of the US dollar. All this stuff is intertwined. As many traders have seen over the last week, stocks with large short positions have gotten squeezed. Traders place large bets on these heavily shorted stocks, hoping the sellers will be forced to buy them back as the price moves higher. Some of these targets include GME, AMC, EXPR costs. However, today traders said to be targeting SLV. Can traders drive the price of silver higher in order to squeeze out short positions? Silver, as with gold, is a precious metal. Precious metals often act as inflation hedge, right? It's a hedge against inflation as the dollar weakens. A move lower in the US dollar often creates inflation. Therefore, as the US dollar is often moving higher or lower, it's going to be one of the most traded targets in the world, the currency market. This is a key difference between a precious metal and a stock. Central banks around the world are backing the currency market. Worldwide central banks will not let a few ill-intended traders manipulate currency markets. And they're talking about Wall Street Bets. And the thing is that the dollar is directly correlated to silver. If the dollar index is high, gold and silver is low, vice versa. And this is where things get interesting, because you know how they said, a few ill-intended traders trying to manipulate the markets, but the dollar's already on its last leg. This could be the thing that really puts things over the fence. And think about stimulus. Think about all the stimulus we've already been throwing out that's already hurting the dollar. America is already $27 trillion in debt, right? The USD is the world's reserve currency, so every country across the world relies on the dollar's strength. And now we have a situation like this without the talk of stimulus even getting thrown out, with the vaccine spending, right? Trying to distribute that, all that. And then we also have the green energy revolution. This is all tied to silver. All tied to silver. So this is why my name is Silver Slayer, not Gold Slayer, not Crypto Slayer, not Bitcoin Slayer, not Stock Slayer, Silver Slayer. This stuff, this right here is the straw that broke the camel's back. Worldwide central banks will not let a few ill-intended traders manipulate currency markets. The long wicks on their hourly chart below imply that traders understand this concept and that the bid may not hold very long. In addition, the RSI is overbought in the short term and price may be ready for a pullback. Let's see what happens. I definitely think that they're onto something. I don't think this is healthy for the long term, but this could get people's attention. And what they did, or what's going on with GameStop, trying to attack the rich and single-handedly take down from a couple of people or a group of people, is interesting itself. And it really does show how speculation, how markets Not only big billionaire banks can do it but people can as well. Silver lights up as traders seek cover from attempted squeeze. Silver rose around 7% on Thursday as the dollar weakened, making the metal cheaper for buyers outside the United States. Some traders were also primitively moving to cover short positions as rumors rippled through the market about a GameStop-style squeeze driven by retail investors. Calls to drive silver prices higher by buying shares in silver miners and exchange-traded funds, or ETFs, were circulating on social media such as Reddit and Twitter. And they're talking about this article, this post. Now, spot prices shot as high as $26.95. I saw it up to 27 something. And that was after U.S. markets opened, up almost 7% before slipping back to $25.97. After watching GameStop and other shorts getting blasted, rumors that silver could be targeted has traders preemptively covering shorts just in case. And the silver market is much larger and much more liquid than shares of companies such as GameStop, whose shares have ricocheted madly this week because of this effort from retail investors, and this will have little effect. So they're saying that since silver is such a big market compared to GameStop, it won't have the same effect. But does anyone know what silver or how much potential silver has? They don't understand this. This is where I come in. This is where my voice comes in. People, especially Main Street investors, mainstream media, people that invest in stocks, they don't know about silver. They don't know all that I know about silver. They don't know there's a silver shortage. They didn't even know that silver was the number one performing asset for 2020. They don't know how much potential silver has in the coming not only months, but decades from now. Silver, the most highly conductive metal for thermal conductivity and electricity and light sensitivity, is needed in everything industrial. Like the post even said, it's an industrial and a monetary metal, best of both worlds. Silver needed in 5G technology, electric vehicles. Not only that, but also Joe Biden's in office, so the green energy revolution with solar panels, photovoltaic cells. Silver demand is already starting to skyrocket in the next 3 to 5 years. We're talking about quadrupling, and there's already a shortage. So silver from the physical demand side is already unstable. It's scarce, and that's why you see high premiums on American Eagles. Now, something like this could be the straw that breaks the camel's back. If you're looking at it from a mainstream perspective, yes, silver's a big market, but they don't already know how unstable silver is. And if we're talking about affecting the U.S. dollar, precious metals are directly correlated to the U.S. dollar. If the dollar index is low, gold and silver is high. And we haven't even talked about stimulus getting thrown out affecting the dollar even more, or the vaccine distributing all the money that throws, all the excessive spending from Joe Biden. So without all that context, you can't really say a very valid point. This could be a very interesting situation here. I'm not saying it's going to explode silver to $1,000, but the thought and what this could do is definitely interesting and could be astronomical and detrimental to a lot of people. Few investors will be unaware of the strange investment phenomenon on Wall Street, which has seen apparent no-hope stocks like GameStop soar in value as a new breed of investors have used it to target short-selling hedge funds. Short selling is at best a controversial activity, so for perhaps a more altruistic type of investor, they act directly tackling the short selling hedge funds and at the same time using the funds woes to sometimes make substantial profits. It's a very positive means to what they would probably see as a justifiable end. And it's almost like where, you would almost hear, I remember reading the articles from JP Morgan employees when they got sent to prison for spoofing, and they tried to compare it to real estate, saying, well, real estate's essentially spoofing as well, right? You say something and you could call out and buff it, and it's not the same thing, right? It's not the same thing whatsoever. So this saga has been exacerbated by the low interest rate environment, making money cheap to borrow, plus the rise in free or low cost internet trading platforms like Robinhood. This has all brought a plethora of new, non-traditional equity investors to play who are far more open to new investment ideas than such more long-established investment community. There is a new era. People are generations are getting younger. Now you see people in their 20s investing. It usually was 30s, 40s. Now apps like Robinhood, Coinbase make it so easy to invest. And by the way, did I mention that Coinbase is shut down right now? You can't buy, sell, or trade or even cash out Bitcoin. This is affecting everything. This all has a domino effect. I'm not lying about the Coinbase thing. Right now, I'm going to go on Coinbase right now on my phone. So I'm going to try to sell some Bitcoin right now while I'm on screen. Sell Bitcoin. Let's see. Preview sell. So this screen comes up and it says it's offline. It says currently offline. I click the tab and it says, oh, we'll redirect you. And then it goes to this page. And then they're talking about they'll update us in an hour. So at the time, Coinbase is down. So this is a domino effect, and it's affecting everything and everyone. And it's see, people are looking at this from an intro perspective. They're looking at this from a very small-minded perspective. They're looking at the P's and the Q's. You got to look at the X and the Z's. You know what I'm saying? If you just looked at the act itself, no, it's not going to hurt silver much, or it's not going to push silver higher much. But if you look at the ripple effect and what this has sparked, how people now see the effect they can do, and the controversy and the rumors and the attention, it's only going to get more dramatic, and it's going to equate to different levels. And eventually it will push somewhere that people don't want to go, especially the Wall Street investors, especially the mainstream media type of people. But the people that invest like us, that understand, that invest in the precious metals, invest in the crypto, invest in the companies because we're trying to go against the grain, it's going to benefit us, whether they like it or not. Like they said, a couple of ill-intended investors aren't going to be able to mess up such a big business or to a currency that to that extent. Who knows, right? You don't want us to, but who knows what effect it could have in the future. Not just this act itself, but this could be the staple that starts it. Silver and gold may or may not benefit in the short term in any such crash. And that's what I'm saying. The day-to-day is irrelevant. We're living in unstable, uncertain times, so the prices aren't going to be stable or certain. But I know for the medium to long term, silver definitely has potential. As the dollar isn't going anywhere up anytime soon, I can't see how throwing trillions of more dollars out is going to help the dollar, strengthen it. No, because then they have to print more money, weakening the dollar. They do provide a degree of safety, but as in 2008 stock meltdown, some big holders will have to sell good assets along with bad preserve liquidity. But remember in 2008, what happened 3 years later? $50 silver. 2008, the credit crisis, financial crisis, crashed everything just like nowadays. 3 years later led to $50 silver. Back then, 2008, $1 billion stimulus. Nowadays, $1 trillion stimulus and a global pandemic. See, this is all correlated, but things are just so much more extreme nowadays, so much more drastic. If you want to talk about crazy silver prices, we're living in crazy times. Look at this. Where do you see, we're in 2021 when this type of stuff could be possible. The advantages of SLV over PSLV are clear. Much more available on brokers, much more liquid, and of course, it has options. This is going to be interesting. I'm going to keep covering this stuff. I'm going to keep you guys in the loop. What do you guys think about this, right? I kind of ventured off in a lot of different directions as I was reading this, but it's because this is such a complex topic. It's much more than just this post. It's much deeper than just this post. It's much deeper than just what they're doing, because this ripples into so many other areas, including Coinbase, into the US dollar and for the future of silver and the markets and investing itself. So I hope I got my point across. I hope I did okay on this video. I know I got a little out of hand at some points, but there's just so much going on. My mind is jumping to a million thoughts a second, and that's because I'm so passionate about silver. Something like this is extremely interesting, but it also has a whole nother side of things when we're comparing this to the stock markets as well. So anyways, if you enjoyed this video, if you thought it was informational, educational, at least entertaining, make sure to smash the like button. If you went in on my 35,000 subscriber giveaway, last chance, only a couple hours left, so make sure you're subscribed. Thanks for tuning in. This was Silver Slayer. I'll see you guys soon. Peace.